What's up, guys? This is Felipe from the Noob Trader, and in today's video, I want to do a quick video just talking about essentially why a stop loss is so important. We're going to discuss the crazy price action that we've seen in gold over the past few days. What's caused this? I mean, I think obviously everybody knows that this is due to the political tensions between Russia and the U.S., but why? Yes, I was wrong, and why sometimes, despite the amount of time that we spend studying the charts and studying fundamentals, we can still be wrong, and hence we need to use a stop loss. So let's get into it. So the last time I released a video was on February 10th, just before, or February 9th, just before the CPI report, right, that was coming out. And what I was saying in the video is that I don't think that the CPI report, whether we, hit a bit over, hit a bit under, or even hit quite a bit over, the forecast, I don't think necessarily that it's going to do that much in terms of gold price, and that we were going to continue staying in this price wedge that was clearly forming on the day chart here, right? I mean, very, very clear all the way back since, um, the middle of last year. And sure enough, when the CPI came out, which, by the way, in case you aren't aware, was, yeah, a bit over the forecast. So yeah, we can in fact take a look at it here. Yeah, CPI year on year now, 7.5%. We're only trending nice and upwards. Again, probably should expect the same thing over the coming months, well, at least until they raise interest rates. And even the 0.25% interest rate raise is not going to probably do very much for this crazy inflation. We all know it's much higher than this, blah, blah, blah. I digress. But the point is that, yeah, we were over, but the reality is that price, not much happened in terms of price. Yes, there was a short-term volatility there. If we actually go into, for example, the 4-hour chart on that particular day, February 10th, here we go around here. Yeah, the volatility was nothing crazy, right? And we were just continuing to stay in the price wedge. But then all of a sudden, come Friday, in that video that I did analyzing the CPI report, what I said was the biggest narrative right now in the gold market and for gold traders is the CPI, the inflation issue and the interest rate hike issue, right? But in previous videos, I'd always talked about the second potential big narrative, which was the political tensions. But I forgot about it in the Thursday video, simply because I thought that the CPI report and the inflation problem and the interest rate hike discussion or narrative was going to be at the forefront on that day, just because the report was coming out. So I didn't even really consider that the Russia-U.S. tensions could really boil over just at the same period of time. Slipped my mind, right? And it can happen to anybody. Um, as I've discussed multiple times on this channel before, gold does best in times of fear. Okay, and these political tensions have certainly caused fear in markets, as well as with the inflation issue and all of those things. This is what gold thrives on. So naturally, what we saw was a huge price spike right out of the price wedge, right? As all the news was starting to come out that Ukraine's going to invade, Russia's going to invade the Ukraine. February 16th is going to be the date, so forth, so forth, so forth, so forth. And that's what we really, really saw. Um, and in the video that I did, kind of doing my prediction on the CEPI report, what I was saying is that if you want to take a really, really good risk to reward trading position, what you should do is if, the gold price starts reaching the top end of the wedge, take a short position, set up a stop loss above the wedge, and try and ride it back down. Or if it goes down, take a buy position at the lower end of the wedge, with obviously a stop loss, maybe around 17.8 or whatever, below the price wedge line, just so you don't get whipped out, and ride the price action back to the top of the wedge. And initially, I even took a position. I took a position, I believe, at 1841, if I'm not mistaken, and I set stop loss around 1855. I thought that, yeah, this was a smart idea. And sure enough, initially, it looked like everything was moving in the right direction. And I just thought, okay, yeah, I'm going to cash in some profits here. And in fact, at one point when the price of gold was around 1820, I actually moved my stop loss to break even. So I moved it to about 1838. Just because, I like to personally, that's personally my strategy in terms of taking profits, move my stop loss, and just try and ride the momentum down, 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 down in the case of a short, or up, 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 up in the case of a long. And so I had the stop loss, moved it down. And sure enough, when all this Russian political tension came out, I got stopped out real quick at my break-even point, or slightly, it's very, 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 very tiny profit, right? Basically break even. I got stopped out really quick. And that was that particular instance that happened with all the Russia-US media headlines coming out on that day really served as a lesson for me to remember, again, two key things. One, the number one thing that drives gold markets bullish is fear, period. Seen this throughout history. This does not fail, okay? Doesn't matter. It's clear, like even during times of crazy inflation, crazy rate hike narratives, etc., when these political tensions really start boiling over, gold tends to do well as other commodities, but gold tends to do well. Okay. The second thing is that thank God I used a stop loss, because if I didn't, I could have been down pretty bad, and then basically sweating nuggets, just waiting to see if gold would ever potentially come back down to the 1841 level, right? And right now, what we're seeing from a technical standpoint is, yes, the news has started to spin a bit more positive in Western media, right? Now they're saying that there's reports saying that Russia's pulling troops back, blah, blah, blah. But then there's conflicting reports from NATO saying, no, that's not necessarily true at all. Who really fucking knows? It's very hard to analyze and very hard to predict. You can try and predict all you want. But the reality is that from a technical standpoint, we've now broken out of this price wedge. We have reached this previous resistance here, right? If we were to draw a straight line here, in fact, I'll just do it right now, basically hit a previous resistance point here. And now we obviously got rejected, coinciding with these reports coming out, of course. And now we're really trying to see if we can actually turn this price wedge line here, and if that can actually become new support instead of resistance. It's been such strong resistance for almost a year now. Now the price action and the market is basically trying to determine whether this will become a new support range. Okay. Yeah, so chances are, if you did take a position below the price wedge, I'm not saying chances are, but what I mean is that if you did take a position below the price wedge, you're probably sweating buckets, because there's a good chance, I mean, especially with all the news going on right now, that we will make this support. There's a good chance. I mean, maybe everything will really calm down again. I think when you really start analyzing the political situation at the moment, you really realize that the chances of war are extremely, extremely slim. Russia doesn't want to necessarily do that. This is just a power play by Putin. He's got Biden by the fucking balls. So chances are that, you know, things will eventually calm down. But as of now, right, this is still the number one driving news narrative globally. Okay, so there's a good chance that we can make the support. And if you had a position below the price wedge and you didn't set a stop loss, man, this is going to really, really, really suck for you. Okay, so a lesson to all the beginners out there: don't forget to use a stop loss, even if it feels stupid when you do get stopped out. I feel stupid, for example, sometimes when I move my stop loss to just above break even. I could have taken a nice profit at 1820, but I was, I guess, a little bit greedy. I don't know. So that's why I used my moving stop loss method to take profits. Didn't work for me. Okay, but the reality is that it's better to get stopped out than to get your account blown out. And hopefully, if anybody did get their account blown out on that particular day, you've learned your lesson. Okay. Anyways, guys, I've rambled enough for today. I hopefully will be doing another video like tomorrow, later, or maybe Thursday morning, because I do want to also touch on the FOMC minutes report that's going to come out. That should definitely be moving markets. I'm sure there's going to be interest rate talk coming out of that minutes report. So we can discuss that in another video. But anyways, guys, if you like this video, please consider giving it a thumbs up. or leave a comment if you have any questions. I'm happy to answer, and I'll see you in the next video. Take care, guys.